Hey everyone, Joshua Grossman here with Lifestyle and Ben channel with Epic Realty in Bend, Oregon. And today we have a super cool guest. Her name is Crystal Hanna. And Crystal, what mortgage company are you with?
I'm with Top Flight. We're based out of Michigan.
All right, awesome. But just because they're out of Michigan, that means they can do loans all over the place because we're licensed in, how many states are you guys licensed in?
We're licensed in 48 states, and I'm actually physically in Clackamas. I'm in Oregon as well. Our main office is just out of Michigan, so.
That's cool. And what we're going to talk to Crystal about today is kind of a cool topic. I get a ton of calls with people saying, hey, I want to lease to own my property, right? And there's lots of pitfalls in leasing to own a property. A lot of times sellers will take huge deposits, and if you default, you lose that deposit, and it's just usually not a super good deal for the buyer. But Crystal, on a call I had in my referral network, said they have a legitimate program that's backed up by an Indian tribe, right?
Yep.
By a Native American tribe. And man, it just sounds super cool. So I wanted to get her on the channel and just interview her about the process, and we'll kind of go from there. So Crystal, let's start off with you. Give us a little background on you. How long have you been in mortgages, and what's your background?
Yeah, so my name's Crystal Hanna, and I've been originating since 2022. I've spent 9 years in the industry. I've served in every capacity from post-closing and ops to on this side. And so I really enjoy being on this side and getting to educate people. It's been a great fit for me. And within the 9 years that I've been doing this, I haven't found a single program that's like our lease to own option. This is truly a unique program, and one of those things that almost sounds too good to be true, but it is like you said, it's legit.
And that's why I got it, because when you guys announced it, I was like, come on, I've been in this business for 23 years, since 2003. I've never found a legit lease to own program. I've heard lots of people talk about it, but there's always some kind of caveat or catch, or you're going to lose all your money, or you're going to pay this. The other thing is too, is you end up paying way more than what the house is worth a lot of times. So yeah, I was super excited to hear that. So that's cool. That I love helping people too. That's kind of why I do this channel, so we can get the right information out to people. And then, if they want to call us and ask for help, we are more than willing to get it. So do you want to, what's your NMLS number? Because I know you guys are supposed to say that, right?
203-9930.
All right. So Crystal's legit. She's got the NMLS number. And let's talk about lease to own. So Crystal, give us a backstory. What does someone need to do to qualify for this program, and how is it different from all of the other hype that you hear all over the internet?
Yeah, so this program actually was created to be an FHA fallout program. So if it doesn't fit within the FHA guidelines, this is something that we can take a look at to get our clients into homes.
So maybe give a brief overview of what the FHA guidelines are for people, because we do this every day, but the people watching this channel don't, so they definitely don't understand what that might mean.
Yeah, so an FHA loan is going to be typically your entry level loan program from someone who's a first time home buyer. There's the ability to put 3.5% down. You're going to get a better interest rate because the mortgage insurance is backed by HUD. There's more flexibility within the program. You can be 2 years out of bankruptcy, and we can go this route. It's a alternative to a conventional loan, which is kind of like your standard loan program, if you will, and what people think about when they think they need 20% down. So this is a great option for someone who's going to be a first time home buyer. Maybe their credit scores are a little bit lower or have a higher debt load. We can also do a higher debt to income ratio on the back end than we can with a conventional program. So it usually typically ends up being your first time home buyer program.
Well, that's awesome, because we help a lot of first time home buyers. And right now in Bend, a first time home is $500,000. So it really is kind of weird that $500,000 is a first time home for virtually everybody. And so, definitely people need help getting into that. All right. So can't do an FHA loan for whatever the reason is. Maybe your credit score is too low, or maybe you don't have the down payment. What's the down payment requirement on the FHA? The minimum is 3.5%, right?
Mm-hmm. And that's going to be the same as well with this program. So another thing with FHA loan, if you're self-employed, typically we'll need 2 months or 2 years of bank statements, 2 years 1099s. And with this program, we can do 6 months bank statements and 3 months of 1099s. So we don't need quite all the income documentation that you would need with a standard FHA loan. So that's where this program's really excelling, is with self-employed individuals. Cool. So if you don't fit into those guidelines, essentially what happens is we can take a look at this program for you. We do pre-underwrite. So we have an underwriter that looks at it before you go out shopping, so you can really shop with confidence. That's a big deal. And what happens is we have a tribe. It's called the Tool River Tribe, and it's their home buyer earned equity agency program. And they're going to really be the ones that are purchasing the home. But our clients go out there, they're shopping just like a traditional home purchase. And then there's an addendum that comes into play that says that the Tool River Tribe is going to be the ones actually purchasing it. You then rent from the tribe. And after 12 months of making payments, and hopefully during that time, we're working to either build your credit or get you the right income documentation, or maybe you need, you finally have 2 years of self-employment income, we can refinance you into a traditional FHA mortgage and out of this program. So this lets you get into the home sooner. You can start building equity and, have that sense of stability that you're looking for when you buy a home.
You said one thing that's really, really important, right? Like looking for someone that's actually offering a lease to own is tough. Like that's 1 in 100. Not everyone's going to do this. This gives you the ability to go out and look at everything that's for sale, on market or off market, right? And just bring an actual offer to the people. And I'm telling you what, right now, sellers are going to like that a lot more than, hey, I'm going to give you 10 grand and then I promise to make payments for you. And you got to act as a landlord. And you got to carry the note. No, by the way, you have to own that house 100% outright because you would need to be in first lien position. So there's so many caveats to this lease to own option that this just absolutely erases. And for you buyers out there, maybe you're self-employed. Maybe you haven't been on a job a while. Maybe you have a little bit of credit issues. Maybe you just have things to work on. This might be a good opportunity for you. You still have to have a little money down, right? And we talked about that. Like you still have to have that. Was it 3.5% is the minimum?
3.5% down and closing costs. Yes.
Okay. But a lot of times we can get closing costs from the seller. Like especially if it's a traditional sale. This year I have yet to fail, knock on wood, at getting closing costs for any of my buyers. And I've gotten some amazing deals because like sellers still have to sell. This interest rate and like the 6.5, people are scared of that. I will tell you though, if you are not older like myself and you've never seen interest rates at a higher thing, there was a period of time where interest rates were in the 16, 17, and 18%. In the not too recent past, right? And so this 6% rate is not too terrible, and we'll probably never see 3% again. Most likely never, unless we have some kind of terrible, pandemic or COVID thing again. But this gives people that are right on the edge of qualifying for a normal mortgage, as long as they have a little bit of money down. And 3.5%, what's that? 16.5, right? On $500,000 roughly.
Yeah.
So that's not that much money, guys. Like we can teach you how to save that money too. Like give us a call.
And it can be gifted to you too. It doesn't have to be your own funds.
Yeah.
So that's another great opportunity too. I mean, we could also look at a 401k loan. There's lots of ways to get creative around structuring and coming up with that down payment. So I always tell my clients, like, don't let that to be a deterrent for you.
Yeah. So you talked about some pros, right? Like fairly easy qualification. What are the cons of this? Every has good and bad, right? So what are the bad points of this?
Absolutely. So one thing with this is it is higher than what your market interest rate is going to be. It's at 8.25%. Okay.
So a little bit higher, but that means because there's an investor behind this, which is the Native American tribe, right? And they're loaning you money so they can make money. But it's a short-term kind of a thing, a 1-year deal, right? And actually, even at 8.5%, if you were to wait a year to 2 to buy a house, till you build credit or get a down payment or whatever it happens to be, you're likely going to actually pay more for the house, even at a lower interest rate, because prices keep escalating. You see this stuff in the news right now that prices are falling. That's not absolutely true. Prices are stabilizing because it's winter, right? And then in spring, they'll start going back up again. Not a lot of people buy houses in winter, although it's probably the best time to buy a house because you get the best deals. That's what's really happening in the market. Yeah. Prices aren't really falling, they're stabilizing.
And I would say that you touched on this earlier. I think that this program's really thriving in this market because homes are sitting on the market longer than they have traditionally. And we're able to leverage that with seller credits and something like this. It's a great alternative, as you were saying, versus seller carried financing. And so it just gives us, this market is really the best environment for this.
Yeah, I mean, I'm super excited about it because I have several clients right now that I could be like, hey, I know we're waiting on this, especially you self-employed people out there. I personally am self-employed, right? Unless you've been doing this for a while, you got to have all your ducks in a row. This seems like, the ducks don't have to be, they still have to be in a row, and you still have to have some money, but not maybe in a perfect line. Like
not in a perfect line by any means. And if there's some things that stretch the guidelines, we can always ask for an exception, and they're really lenient with the exceptions because the tribe is the ones that's underwriting this loan. So they're looking at each file individually. It doesn't have to fit into a perfect box. And so there's a lot of flexibility with it for sure.
And I think that's important too, because there's an actual person. This isn't a computer behind a desk, right? This is an actual person looking at your file, looking at your individual case. And for a lot of these first-time home buyers, that's what we need, is someone to say, hey, you're a good credit risk because you do this, this, and this. And yeah, we understand that's happened, right? Maybe you have a late medical payment or whatever it happens to be, right? But like, stuff happens in life. And if you can get actual people to look and underwrite your file, and it sounds like you guys do their underwriting right up front, so we're not wasting anyone's time, and we'll have an answer. Like, so what's the typical turnaround time? So if I call you and say, hey, Crystal, meet Joe and Bobby. Joe and Bobby are, a newer couple. They, have a fairly good income, not super established credit right now. Like, what's the time from me introducing you to you saying, hey, we can go buy a house and this is the value of the house can be?
We like to ask for a week to have it, just because we're also looking at it and then having the tribe look at it and underwrite it. And so giving us, 5 working days is great. If you need it faster than that, let's still have a conversation. Again, don't let that be something that deters you. You were talking about this program and, some things that are a little more challenging with it. So there are more moving pieces. There are more people involved with this program. So we ask for 40 days for closing instead of your typical 30. And again, that's because there's real people on the other side of this looking at the file. They also have to ink sign everything from the purchase agreement on. And so we have to get them the documents to sign. So we do ask for 40 days, but if somebody applied today, next week, you guys could be looking for homes.
I mean, that's pretty awesome, right? Even like a standard run-of-the-mill mortgage still can take like 30 days. Sometimes you can do them a little faster, but like 10 more days is not that big of a deal. Most every seller out there would understand. And like, I'll tell you right now, a lot of sellers would be super excited to get offers on their houses that have been in the market for 200 days, 300 days, right? And so the deals are out there again. I wouldn't worry about closing costs because like, if you give us a call, we're really good at getting them. Like, almost nobody says no to closing costs right now. Like, a lot of people are just excited to get offers, and they're like, oh yeah, I sold a house last week that actually sold for less than what it sold for 2 years ago, and the people owned it outright. So they literally just walked away from cash because they had to get their house sold and it wasn't moving, right? So things are definitely moving if you are shopping with the right people and you have the right tools. And this definitely sounds like a tool that you would want to have in your tool belt. So Crystal, like, you talked about the good and you talked about the bad, like, and it's for first-time home buyers. So just a brief synopsis, right? First-time home buyer, mostly loan. You're going to pay a little higher interest rate, but it gives you the ability to shop right now for what's available and not hope that someone will say, yes, I will do a lease own. I will carry the note personally. Seller financing, guys, is like super, super sketchy. Like, the people that are seller financing are not looking out for the good of you. They're looking out for the good of their pocket, right? And yes, the tribe is going to make some money on this, but this is an amazing program, and it's not terribly expensive because I've seen some hard money loans that are 10, 12, 15%.
Yeah, we do hard money. Ours is at 12%. And I mean, even some I-10s right now are over 9. Yeah. So 8.25 is not terrible. Yeah,
and what an I-10 is for everyone out there is that's for someone that's not that can work in the U.S. legally, but they're not a U.S. citizen. So
they have a tax identification number versus a social security number. Yeah, exactly.
So cool, Crystal. Give us your contact information and we'll flash it on the screen so people can reach out. And what's the best way? Do you like text, email, phone call? What's the best way for someone to get a hold of you?
Texting is great. My phone number is 503-801-4161. That's 503-801-4161. And my email is khanna, Hanna, at tfhomeloans.com.
And we're going to use the magic of the internet to put that in a little blog post right here. And so
amazing. I'll send you my compliance too. That's probably a good idea. I forget about that.
That's all right. And everyone, this Lifestyle in Bend channel, we're with Epic Realty in Bend, Oregon. If you're looking for a house anywhere in Central Oregon, we can help. Actually, anywhere in the United States, we can help. We have amazing referral partners. That's actually I met Crystal was in one of my in the Bang Referral Network, which is a agent only referral network that spans the entire U.S. So we'd love for you to like, we'd love for you to subscribe, we'd love for you to share. More than anything else, we'd love you to grab a link on our calendar to our free Zoom meeting, and let's chat about your options. So, Crystal, I appreciate you jumping on the channel today, giving this brief explain of this cool lease-to-own program, and we'll talk to everyone soon.
Awesome. Thanks.